Hey there, investors. This is Tyler from Augury Research. In this video, we are going to go over the GARP checklist number 2, and we are going to be diving into the company ELVT. That's the ticker symbol. And I kind of wanted to do a live lesson for a few different reasons. I want to go through the content, show you guys how I hit checkpoint number 2, and then if anyone's on here, feel free to ask questions at the end of the lesson. I'm going to try to keep it relatively quick. I actually have the radio show at 2:30, so we don't have too much time, but I wanted to put together this lesson because it's important, and I guess without further ado, let's jump right in. Okay, I'm going to move this over. Let's pull up Google. All right, so this is where I start. Right, good place to start, Google. All right, and basically, well, what the question is, does this company still have room to grow in its industry? So two things that are pretty important here. One, we always want to be conscious of the idea that a business is worth how much money it's going to produce in profits over the course of its life. So the price you pay is pretty important. For this particular company, I guess we'll go here. We're going to start at finviz.com. I think this is I got a little cheat code here where I just type in finviz. Oops. And then hit space, and now I can just type right the ticker. Okay. And this is a good place to start, right? Because we want to know what does this company do, and we want to know who's in the industry. So the easiest way to find out who's in the industry, and first off, we need to realize that this is a $130 million market cap, sales of around 400 million. We see that here, and I got to make sure that my screen is showing, which I don't think it is. Okay, now we're rocking and rolling. Sorry about that. So basically, all I did is go to finviz.com, and I pulled up the company that we're searching. We have the market cap right here, $131 million. Income right here, $40 million. And then sales of around $400 million. That's really, really important. But the reason why this website is so useful and such a great place to start is we can go right here. We can find all of the other companies inside this industry. All right. So now that we have the industry pulled up, we can see we have 58 stocks in here. We can sort them by market cap. Now we'll start from the bottom up. And basically, I've actually, already done a little bit of research here. And the reason I like this particular tool in using this snapshot view is you get the description of the business down here. So we can actually, cut down the search time and cross out all of the companies that are not really doing the same thing as our business, because these industries are a little bit different, from each other, right? So Alleviate is pretty niched in the fact that they're doing these payday loans. And the one company that I know, I already read through all of these. The one company that I thought was pretty similar was, so this is our company that we are considering. And if we see here, basically, they're giving lines of credit, different types of loans. These are actually pretty close to payday loans, but basically they say, non-prime customers. That's what we're looking for. And the other company I saw that was similar, was, and remember, you're going to be going through all of these companies until you find something that's relatively similar. So it's this company, ENVA. Now, what ENVA does is basically they're doing these loans as well, and they're leveraging technology and analytics, and that's what we see Alleviate doing. Very similar business types. This company is obviously larger, but I will say I actually like the company I found a little bit better. So this company is actually a $1.37 billion business. They're doing sales of around 800 million, so only double, uh, only double, only double Alleviate, and basically, they're doing a lot more income. Obviously, about 10 times the income as Alleviate. Let's get these guys up side by side. I'm just going to go here. I'm typing FinViz and get Alleviate up. Okay. So if we compare the two, market cap of 130, this company has a market cap of 1.3 billion. So basically 10 times the size. They're doing income 10 times the income, and sales are 800 million, and our sales are 400 million. So, basically, I like this. I kind of like this setup, and the business types are relatively similar, and they're both pretty cheap in terms of valuations. But this one, you can see here, right? Non-prime customers and businesses, and they're leveraging technology. So very similar to what Alleviate is doing. If you watch the previous live stream, Alleviate is also, leveraging data and, trying to give loans to people that hopefully are going to be able to repay them. And that's really the big thing here is they're, instead of using typical FICO credit scores and stuff like that, they're relying on a different data set, and they're saying, these are the factors that we need to be considering to figure out if we can, lend this amount of, we want to, take this much risk on this particular customer. Here's the data that we're using to decide, if it's smart to take this risk or leave it. And I pull up the business and I go, yeah, this is working. This is working pretty good. We see EPS rising. Don't get me wrong. We did have coronavirus that basically alleviated a lot. You're talking about people that never had $400, that couldn't save up $400. They get a check from the government for like $600 and then $1,400. Yes, that is going to affect the dynamics of this business. But we can kind of see here it was already starting to show the value before COVID happened. And then COVID, helped alleviate, most of this lending book that they had. So the second thing I'm going to do after, you can continue to go through our list of credit service companies and see if any other ones match this similar business type. Now, another thing that I was looking at, which maybe I'll start here, and I like this opportunity because, and I would actually call this, I would consider this an opportunity. If you actually go, and I'm not going to dig through all of this stuff, but if you have to actually go through and look at, some of these states are trying to get rid of these payday loan companies because they're charging ridiculous amounts. And I read through a couple of the states, and I think Alleviate is honestly different. And I think, in court, they would be able to, differentiate themselves from, a typical payday loan company. They are actually 75% cheaper than typical payday loans. And, there's a lot of differences. And I actually think Alleviate is doing a good job. If you read more into their business, you can actually see that these guys are actually helping the customers out. Fact of the matter is the consumer spending habits haven't really changed too much. I think we're going to go right back to where we were before COVID, and people are going to, maybe outspend their income. And this is kind of another thing that I liked, is that if we go into the filings, right, of this company Alleviate, and we look into them, right, I'm going to pull up the 10K because that always has the best, a vast amount of information. These guys call it, new middle class. See, so these guys are basically saying, there's this new middle class that's kind of out there today, and we want to target these guys and lend to them. You can see I kind of already highlighted some stuff, but average income, $50,000, $50,000, let's call it. A lot of these guys are just out of college and buy their homes, and they have a credit score of under prime, but okay, these guys are lendable. Right? That's our target audience. They are lendable. It's just like we don't want to lend them without getting enough reward for the risks that we're taking, because they're not all going to pay back these loans. And that was the kind of thing I like too about this business, is that I think the risk is, as long as they make a couple of payments, as soon as they make a couple payments, we are significantly reducing the overall risk that we're taking, and we're getting plenty of reward for the risk that we are taking. So that was the thing that I kind of like, and I think this is going to work, and I think it's going to work actually well. And I know, since considering the business is so cheap in terms of how much money it's going to produce over time. The greatest risk is that there are, legal issues, and that, this does get kind of thrown into a payday loan company, and the business gets kind of cut off from the government. And even at $120 million, I think it's just worth that risk, at this point in time. And these guys actually go in and say, they give us a lot of information. So this is really the second source that you can use. It should probably be the first one you look into when trying to gauge what's the size of the industry and if they have room to grow. Basically, these guys are saying, look how big this industry is. Basically, from 2008 to 2016, revolving credit available to the U.S. borrowers with a FICO score of less than 660 was reduced by 142 billion. Well, I don't think that, I understand that they shrunk the industry, or these lenders said, we're not lending to these people. That sounds a lot like opportunity. I think there's still people out there that want to borrow, but now basically the supply is getting cut off, and this particular business is there to kind of try to pick up some of that slack. So I think that's a huge number, and these guys are publicly traded. They're basically it seems to be one of the number 2 players in this industry. It's cheap business. Don't get me wrong, there are risks involved, but there's a decent chance that we can make $120 million. The other company is actually making like $400 million, or they made $400 million last year. And I don't think there's any reason why we couldn't double revenue over time. This company's sales are in billions, and they took a hit, but they were growing pretty nice. Our company is not as pretty. We had some issues in the back end with our CEO, and some of the growth numbers weren't hitting, but we were growing revenues too. And then we hit a speed bump, and now we're kind of saying, can we bounce back? I'm saying yes. And I'm also assuming that, we don't even need to bounce back, like in terms of sales numbers, to make $120 million over time, $130 million over time. We just need this business to last longer than the market is saying. So yeah, basically this is the number 2 place to kind of go and look for, industry factors. There's some pretty good stuff in here. Basically, they outline the strategy. I'm not going to dive into the whole 10K, but this is another way to kind of gauge the industry. And then the third way that I want to talk about is kind of using a website like this, where maybe you just dive into payday loans. I logged in here. Okay, this is another thing that's becoming popular: buy now, pay later. We don't necessarily care about that. User age: 25 to 34, 18 to 24. So not just, I would say these are college kids and these are, right out of college, but we're also seeing, 35 to 44 people are, using this tool. This is not payday loans, but these are just, different trends that you can kind of put together. Here's France, which now, basically this company is only in the US. We tried to go to the UK. It didn't work out so well. Came back. So maybe there's not that much room to grow in the industry abroad. Here's loans and debts. Student loan, credit card debt, auto lease, mortgage, personal loans, 8%. Payday loan, 2%. Okay, so obviously that's good that we don't necessarily want people, having these types of loans because they're very high interest rates. But, it is a need. It's still a large market and there's still a need for it. And this company is serving that need, which is really the most important thing. And they're actually adding value compared to payday loans. Now, obviously, payday loans might serve customers that are not qualified for, a Rise loan or an Elevate loan, Alleviate loan. But we're not seeing a ton of data here for so, okay, a $400 expense. People need to use credit cards. So 33% of the people need credit cards. So 1, 2, 3. So relatively small, once again, 2%. I wish there were some better data sets, like maybe the overall size of payday loans. But we're not really seeing that here. And I guess the third way, or the fourth way that we could really get some information is going to the competitors' 10K. And I had looked through their 10Q, but I had not looked through their 10K yet. So these guys, I think Alleviate is only in 35 states. These guys are a little bit bigger. See, so they're using behavior data, stuff like that. Okay, markets. United States. So the United States is all of their business, and they got like a smidge in Brazil. Okay, here's the industry report. And these guys looks like, so they're doing like business as well. And their loans are a little bit more broad. kind of want to just see what they're doing in terms of non-prime credit. Okay, we kind of know all of this stuff. So these guys do have business under their umbrella. I Alleviate does not. Okay, our subprime customer base. So same, you know, they're going after the same customers. I guess a slightly higher end customer. The short-term lending market is sizable in the United States and Brazil. We estimate there is 69 billion consumer lending opportunity in the United States. So that's really, really large considering it looks like Alleviate is one of these players. So wow, Brazil is actually quite a large industry, you know, but they're not getting a lot of business there yet. I don't know if it's a new venture or what. Doesn't seem like anything's happening over there. So, I mean, I think overall there is room to grow in the industry because the industry is large and there's, you know, an unmet need, right? So overall, I think Alleviate is pretty much hitting that you know, addressable market, and they are, you know, one of the players in this industry. But really, they don't even need to grow that much for this opportunity to work, for this investment to work. What they need to do is, you know, find the right customer. That's the most important thing. They find enough of the right customers, they're going to turn a profit, and they're going to end up, you know, returning money to shareholders, either through a buyback, which they already have going, or, you know, through a dividend payment. So overall, right, I got my journal out. I didn't find any like really great information, but I did find enough information where I had already done this checklist. But basically, you know, I think this is at least a, you know, a 2.5, 3 in terms of, does the company still have room to grow in its industry? Yeah, you know, it does, because the industry is going to grow. After COVID, a lot of these loans got paid off. But I think what's going to happen is I think the industry is maybe taken a step back, but I think we'll go back to normal and it'll bounce back, the industry as a whole. And I think Alleviate is trading at a fair enough valuation where, one, we don't even need that much industry growth for it to work. And two, that, you know, they're going to just kind of have this tailwind behind them where, as we get past COVID, more people go back to spending habits and, you know, kind of dig themselves into those holes that they need help getting out of, and Alleviate will kind of be there to serve them. So overall, 2.5, and that kind of wraps this up. There's a couple ways to figure out that number 2 checkpoint in the GARP checklist. If you guys are new to the channel, this is my investing journal. This is kind of what I do. This is my process on how I, you know, what I do before I make an investment. Alleviate is a company that I've been looking into recently. I have a free course in the description below if you guys are interested. We have an investing newsletter with our stock picks, everything that kind of goes on behind the scenes. And I guess outside of that, make sure you guys, you know, if you enjoyed this video, make sure you like it. If you are looking to learn more about investing, make sure you subscribe down below or give us a follow on Instagram, Facebook, you name it, we're on it. Check us out, and definitely check out the Augury Investing Journal. It's a great tool to help you, you know, level up as an investor and, you know, hopefully make rational investing decisions over time and grow those portfolios. That's like the main goal is like I want everyone that follows and everyone that kind of joins Augury to perform. That tool will help you perform. So until next time, I'll be seeing you guys. Peace.